Are you thinking about becoming an S-Corporation? Electing S-Corporate status for your business has great rewards. However, we need to talk about the 5 common mistakes that I have seen over time as a CPA. So let's get started. First things first, what is an S-Corporation? An S-Corporation is not a type of company, corporation, or business. It is just a form of taxation. This gets accomplished because it is going to save you money in self-employment tax. It is going to keep the liability protection for your company, and is definitely going to help you lower the double taxation if you kept it as a C corporation. So applying for an S-Corporation status is wonderful to save and keep those benefits, yet have a better form of taxation of your business. How do you accomplish this? Is by filing Form 2553. It is not automatic. It is something the IRS will have to accept you. They will send you a formal letter telling you that you have been accepted as an S-Corporation. Therefore, you can now file Form 1120S instead of Form 1120 or Schedule C if you're a single member LLC. Mistake number 1, missing the S-Corporation election status. And this is like a really big one. I see this all the time. People don't even realize that they only have 2.5 months to do the election, and then it runs late. So let's say that your corporation started in January 1st. You only have until March 15 to get that election request filed. I'll give you an example of how this could be hurtful. Let's say that during this year, you made $100,000 worth of profit and you did not know filing the S-Corporation status. Now at the end of the year, without even realizing, just self-employment tax, not even federal income tax, but just self-employment tax is going to cost you over $15,000. This can be very painful. Now, there are ways that you can file a late corporate status, and I definitely suggest that if you decide to do that, you not only find someone that knows how to do this and that can guide you without getting into trouble. This will be a lot more costly, but it will not be as costly than without the election itself. Do remember, there is a deadline. There are exemptions that can be taken, but they must be carefully done. Not a lot of people know how to process a late election and to make sure that they plan what should be done for the company, like doing payroll taxes, and making it look like you're not avoiding taxation. It was a simple mistake, and planning accordingly so you follow the IRS rules. Mistake number 2, not paying yourself a reasonable salary. But the key word here is reasonable. How could you pay yourself a salary if your business is making no money? But also, if your business is making money, you should be paying yourself and paying those payroll taxes. It is important to strategize salary. It is going to be depending on the amount of income that you're bringing into the company that will also make it reasonable. Most of the times, this should be handled by a professional with experience. But as a rule of thumb, let's say your business made $100,000. You need the money to put it in all these other different investments. So the owner should make a minimum of $30,000 in salary. Do remember, when you are paying these salaries to the owners, you are paying into Social Security, Medicare, unemployment benefits, and I have seen it in my experience. They come in handy if something goes wrong with the business. So besides that, it is a common mistake. It is one to be analyzed all the time on an ongoing basis, because this could be an IRS problem, and they could actually take all your net income as profit to be taxed entirely for self-employment tax. So let's remember, a salary and having somebody to help you analyze how that salary should be given to you, the amount would be very important. Mistake number 3, mixing business and personal expenses. I see this a lot. Clients drive by getting their fast food lunch every day and use their business account instead of their personal account. This is definitely a no-no. We create not only lots of transactions for the accounting cycle, but we also are breaking IRS rules. And a lot of people don't think to understand that a corporation is a legal separate entity. So let's put it like this. Let's say that you had your neighbor's debit card. Would you use it for their everyday lunch? So take that concept. this is not you. This is a legal separate entity, and the life of the bank account says everything about that business. So that's why you want to make sure business and personal are always separate. Mistake number 4, having ineligible shareholders. First, you can't have more than 100. The second thing is, if you have a shareholder who is not a U.S. resident, you cannot ask for S-Corporate status. Now, it is important to understand that not U.S. resident does not mean not U.S. citizen. In order to qualify for S-Corporation status, a shareholder, as long as it is a resident, can apply for S-Corporate status regardless of its immigration status. And this gets confused a lot. Third point is, do not use corporations or partnerships as shareholders, because this would also revoke your S-Corporate status. And I want to make sure that if you have like a foreign family member that wants to be part of an owner of this company as a shareholder, once they come into the company, you will lose your S-Corporate status. Rule of thumb, check the rules before you admit anyone in your S-Corporation as a shareholder. Mistake number 5, not paying payroll taxes. When you elect to be an S-Corporation, and let's say you're the only employee of that company, well, because it's you, many clients, they just decide not to pay the payroll taxes, not to file the 941s, and all the required payroll forms that go along with it. Then at one point or another, they get a letter from the IRS, and now they could take all that net income, let's say it's $100,000, and they're gonna make it all be part of self-employment tax. This is what you want to avoid. You want to file, you want to get a company that makes your payroll on a monthly basis or quarterly basis, on any basis that you are able and you're comfortable with. And once that these things are being run for you, they automatically, all the forms are being done, the taxes for the payroll are being paid, you're staying out of trouble, getting the benefits like such as unemployment, etc. And you get payroll and you do the compliance. It is very important. I see this all the time. I actually had an audit a few years ago where the client did not pay the payroll taxes because they decided that they were just going to go through without it. Fortunately enough, I was able to negotiate with the auditor that it was an oversight. Not everybody's going to react the same way depending on the amount of time that you've been in business, and you have not been doing this correctly. So keep in mind, doing your payroll, a reasonable payroll, and it's extremely important, have someone that you are dealing with on an ongoing basis to understand how much and how to save you on payroll for the owners. If you have any questions about S-Corporations, leave them in the comments. We'll be happy to answer back to you. If you like this video, be sure to like and subscribe, and I will see you next time.